Good morning, good afternoon. Hope you're doing well and happy. This is Take Stock Live, brought to you by stockability.com. It's April 29th. It's just gone noon here on the East Coast, and we are live on Facebook Live. My name is Sam Evans. I'm your regular host each week, and this week I'm all on my own. That's right. No Brian, no Ryan, none of the gangs on here. I thought this week I'm going to give all the guests a break and I'm going to do a short and punchy show on my own. I have done this before. We have actually just done the show all on our own before, or should I say me talking about myself in a plural third person is kind of weird. But I have done the show on our own, and the reason for this is not only to give everybody a bit of a rest, but also because we've had some fantastic questions coming in as our viewers are going up and more of you are watching Take Stock Live as well. So we're going to be addressing those after we've done a little bit of a market recap. How has your week been? I'd love to hear. This is live. As I said, we are here on Facebook Live. So go ahead and type your comments in. I will be checking them regularly as well. And you may be looking at the recording of this show. If you are looking at the recording of this show, guys, you might be seeing it here on Facebook Live, but you can also see all the previous Take Stock Live shows on the Stockability homepage. And go and register and sign up for the Stockability YouTube homepage, because we also put other content on there. Just yesterday, Stockability held its very first one-day event. It was a 6-hour marathon from 10 a.m. to 4 p.m. Eastern time, and we had over 200 people registered for that event as well. And if you missed it, you can go to the Stockability homepage right now and peruse it at your own leisure as well. We talked about increasing and enhancing your performance in trading and investing, and there was a little bit of something on there for everybody. So I was speaking on there, lead coach Ryan, Graham, Dan Bustamante, and we had Christy Geiger from Synergy Strategies as well, a performance coach, a lot of great things. If you're struggling with your mental game in your trading and investing, go check that out. All you need to do is go to Stockability on the YouTube page. I'll show you before the day's out as well. We can go and look at that recording. That's up there as well. And if you want to register for that as well, you can go on our website and do it, and we have a very special little coupon for you if there's anything you want to do, taking your education forward with us as well. So lots going on in there as well. As I said, I'll be keeping your comments and questions today, but I wanted to keep things a little bit mellow today. Usually, obviously, we have our guests, and I thought today, you know what? All these questions that keep coming in, and there's a general theme of where do I begin this trading and investing journey? I had a really wonderful comment coming from a regular viewer who said, Sam, I love the energy on the show, and I really want to do this. I just don't know where to begin. I hear you. I know how you feel. It can be very overwhelming. So that is what we're going to be focusing on for the next 35-40 minutes or so today on the show as well. But before we do that, let's go see what is in the news. What's dominating it right now? So all of my market regulars on the show right now who are looking at the market and checking all this out, you know it's a big earnings season right now. And we had some monsters. Big tech earnings coming out end of play yesterday, and some more of those coming out today as well. The big one, was actually a big stock, a big rise in the techs. We did actually open higher with a gap up in the markets today, but the market's given all those gains back. I had a question about that. Why is it on these good earnings markets go down? We'll talk about that in the show today as well. Don't worry about it. But the big boys, Apple and Facebook, both set those stocks sharply higher in the pre-market. And since then, we've been seeing a lot of pressure coming across the market right now. Right now, the MyTS is trading on its lows at 41,076 lows of the day right now. We'll go look at those broad markets in just a second. I know it keeps you scratching your head. You're like, why is it we have good earnings and the market goes down? We're going to discuss that on the show today, because if you are thinking about getting into the markets, one of the biggest challenges you're going to have is dealing with earnings. So we will talk all about that as well. Big shout out to you, Pedro. Great to see you on the show as normal as well. So we had Fed Day as well yesterday. The Federal Reserve held the line on near zero interest rates and asset purchases as well. So Apple came out of blistering earnings. Facebook came out with blistering earnings. We also have seen economy starts 2020 as strong jobless claims as well today as well. So all of that's pretty good in that respect of what we're seeing. But also after the bell, we've got varied results coming in a little bit later on as well. McDonald's came in 11 cents ahead of consensus with adjusted quarterly profits of $1.92 a share as well. Boosted by a better than expected 13.6% jump in US same-store sales. And the shares, guess what, fell mostly in the pre-market as well. The pandemic-induced drop in medical office visits has affected America as well, who saw an earnings shortfall in the first quarter, missing by 23 cents on there. But Caterpillar shares gained 1.6 in pre-market trading after the heavy equipment maker beat estimates by nearly $1. Okay, as the economic recovery, or we've seemed to have been in economic recovery forever, spurred demand for extra equipment as well on this as well. So, yeah, you know, it's Hollis was saying your idea of mellow is anyone else's idea of Roadrunner on steroids. Your energy is amazing. Thank you so much as well. Hey, I love this business. I love this. I'm very passionate about it. I'm glad that's coming across on the airwaves as well. So, yes, we actually had, like I say, Apple and Facebook shares surging as well. Look, we've got big boys coming out. This is not the end of it. This is a big week, this April 26th. We've got earnings coming out tomorrow as well that we've got to be aware of. And finally on this, Biden says America's democracy is rising anew. He was taking his policy agenda to Georgia today. Again, we'll be doing this today. In his first address to a joint session of Congress, Biden on Wednesday night said that America is rising anew and unveiled a $1.8 trillion proposal to invest in children, families and education. Wow. All I can say is a lot of money is being spent. Who's going to foot that bill? Man, crazy, crazy, crazy times as well. Big shout out to you, Phil Jackson, as well. Phil Jackson is going to be a guest on the show in the coming weeks as well. You'll want to hear from this guy who's made tremendous results in his trading and investing. So we've seen good news, a lot of earnings, big stocks doing well. Like I say, those big boys, McDonald's, Merrick, Caterpillar, all earning today. And then we can't forget about the mighty Apple and Facebook as well, who did particularly well today as well. And like I said to you, economy started 2021 strong as jobless claims lowest since March 2020. So it's all good. Yeah, guess what the market's been doing today? Guys, it's been going, you guessed it, it's been going down. Oh my gosh. Why don't we go and take a look at the charts and see on here as well? This is what confuses an awful lot of people. They see good news and then the market does the opposite. I'm going to go and zoom in on the chart so you can see. And look at this big red candle, guys. This is a one-day chart of the S&P right now. Now, remember, we put in new highs today. And in the same time of putting in new highs, let's go ahead and mark those new highs off for you on here. So you guys can actually see them. But those new highs being put in on here are right around 42.10. 42.10 where your new highs on here. And now, guess what? Look what we've seen on here. This market has just kind of sold off ever since as well. You know, this is absolutely crazy for some people. To me, maybe I've been doing it for too long. It's not surprising. There was your all-time high, just zooming in at 42.1075. Right now, where are we trading on here? Let's just zoom in. We can see at 41.6925. Am I majorly concerned? Not really, because I see a major support area around here. But this is going to be a test. 41.69, 41.70. It's kind of common around these days as well. We sometimes in the business see this is a bit of pump and dump. A lot of good news came out, market pushed up. That was one of the questions. Why is it so often that the news does the opposite to the market price? Let's talk about that. My opinion is the market rarely does exactly what the news says. Is the news the reason the market moves, or is the market movement what creates the news, right? Let's talk about that conundrum a little bit later, because we did have a question about that specifically as well. So Dow, like I say, open strong, having a little bit of a down day. Let's go and look at its little brother, the Dow Jones. Sorry, that was the ES, excuse me, S&P. Here's your S&P right now. Dow Jones having a struggling day on here. Again, gapped up on the day. Let's zoom in right for you right now. Slight gap up and now trading at the low of its range. Current price is there, 33,654. Remember, our highs at 34,144 earlier on last week as well. We're in a major support area again. Am I concerned about this? I honestly believe this market needs a little bit of a pullback right now. That's what I want to see in the market, is a bit of a pullback. And I got to say right now, especially going into trading tomorrow, I'm going to be treating this market as a range until otherwise. Anyone investing right now in the market is just probably looking at this going, this is like pulling teeth. Because what are we seeing on here? What are we seeing? Sideways chop in the market, not a whole lot else. Guys, that's some trader's dream. I love that, but I've been a bit ruthless on profit taking. I did manage to get a short position today. I've closed out. I'm done. I wanted to have a short, easy day and have a nice mellow show. Yes, it is mellow. This is my mellowness coming in right now, Hollis, as well. Can't wait to be speaking with you guys as well soon, Hollis. Do check your email. I reached out to you a little while ago as well, because I can't wait to be doing some work with you and hopefully bringing this energy to everybody else as well. So that's the Dow Jones on there, everyone. Again, kind of similar to your S&P. Let's see what else we've got on here right now. I want to look at the big tech ones. Now, obviously, we had Apple and Facebook earnings. So how's that affected the mighty NASDAQ? Obviously, those are major stocks in that as well. Apple is also in the Dow. You know, this thing, I tell you, this NASDAQ has roared back since late February, and March was a monster. But look at the kind of day we're seeing on a NASDAQ. NASDAQ is one of those markets for sure that always feels it a little bit harder. It's always the one, because we call this the honey badger in stockability. Why do we call it the honey badger? We call it the honey badger because the ferocity at which it moves. Ever since I started trading this thing about over a decade ago, it's got faster and faster and faster. Me, I prefer to use longer term strategies on this, not for day trading. But this sell-off, putting new highs again today, we saw right on the open of the futures of 14,060 is your high, but now coming back down into another support area. I do like this a little bit cheaper around this area here. I have to say around the 13,600. It just can't hold 14,000. Guys, if this thing can get above and trade consistently above 14,000, then great. We are not seeing that on the NASDAQ. Again, looks to me like a little bit of a holding pattern, and we need to play that holding pattern as well. Again, great earnings from both Apple and Facebook haven't managed to push this up. It shows that there's a lot of confusion out there. Maybe a lot of people sitting on the fence. Is this market tired? I think it's definitely tired, but I don't think it's done. Let's put it that way on here. But the opportunities are there on the individual stocks. If you're an equities index trader, you're going to be struggling a little bit right now. But again, play the range. It depends on your strategy. Some of us like trends, some of us like stranges. It depends on what floats your boat, guys. But at the moment, be very cautious on here. I don't want to be selling into this. And again, I'll mark this area off for you. I do not want to be selling into something like that. Certainly don't want to be selling into something like that. That is an area where I expect a decent little bounce coming from of some kind. Again, why? Do I have a crystal ball? No, it's just because that's what the chart is telling me, my friends, and that's how I roll. I look at what the chart is telling me, nothing more, nothing less. Let's finally look at the Russell and see on here as well. Russell, as you know, was battering around in our last show at this equilibrium point of 2220. You can see with my orange line, another gap up again. I see more downside on this. This is the weak one. Every time this thing extends itself, I expect a little bit more downside to come on here. I love the way we've closed below 3 of the last 3 days. This is a big outside day on here. Major sign of reversal on this. What I would say is we've got to be cautious, though, is there is a major gap forming just around this area here where I'm going to zoom in where we can see. And on this gap here, we want to see that gap close. This is the test. We've had the weakness. I think we're done on here. This is an opportunity for me for the Russell to get some kind of a rally back off of this gap that we've just closed on here as well. The bounce back in that Russell's been tremendous as well. There's been lots of great opportunity in that Russell, especially during this pandemic and the recovery of the pandemic. So we've definitely seen, obviously, a fantastic move on here. But again, I just can't write this off. And that new equilibrium point, that 2200 point on the Russell, for me, is a line in the sand. That's the orange area here that we can see that I've just marked off on here. And that, for me as well, that area is holding. I have to remain bullish on it. Look, this consolidation period, usually in consolidation periods, we see this before the market is going to be like a coiled spring in a range of either accumulation, as some people call it, or distribution, either to go lower or to go higher. The question is what way? All right, who knows? We don't know. But here's the thing. If you look at the trends, it would suggest we're probably going to go higher unless we see any major news coming out otherwise. You know, I was talking about this on the event just yesterday, actually, with the coaches at Stockability. And while I think this market is so heavily overdone, it is what it is. Who am I to say otherwise? I just got to trade. But what I love about being a short-term trader, and you know I do this a lot, and one of the greatest things about being a short-term trader, and Phil Jackson, you'll know this, is you don't really have to take that long-term outlook. You're just looking for an opportunity as and when it happens as well. Okay? And obviously, news coming up. Rabble rolls over despite blowout earnings. Guys, it did this last time as well. Let's go take a look at Apple and show you exactly what I'm talking about. AAPL is your ticker. Let's go take a look at this. Amazing earnings, but look what has happened on here. Bang, we gapped up today. We were right in as high as 136.53, and now we are down and we're back at these lows. I got to say, I am smelling some buying opportunities on Apple, though. I don't think that this is done. I've been very bullish on Apple, but this was a long-term price target, this 136 area. I'll be willing to talk about this a little bit later on. It is actually on the Your Call, My Put section we'll be doing on the show in a little bit as well. Well, say I'm on my own, but I will be doing both Your Call and My Put today because I haven't got a guest on the show. So today, though, I got to say right now, I wouldn't be surprised to see this move done. Most of the biggest moves in the market are going to happen in the first couple of hours or the last half hour. I'd like to see how this closes. But But again, let's come back and revisit this, because this market definitely, I think, has some potential upside. And I'm going to look at the key areas on that. Any of you longer term plays, I can't write off Apple as a long term play. I really can't. Let's go look at Facebook and see how it planned out on here. Look at that. Brand new high putting on Facebook today at 331.81. Hard on that one. I mean, literally just a case of pump and dump from what I'm seeing on here. I got to say on this, I'm not touching this with somebody else's yardstick. No. I want to see this thing come down. I do see more downside on this market. I wouldn't be interested in this until at least the $310 mark, probably even better at 300. For me, this is a key area, this whole benchmark at 300 on here. Facebook is definitely on my downside list. I think it's overblown, overdone, and I hate it when markets are making new highs and they immediately react like that. It seems like a little bit of a knee jerk to me. So I got to say, on the big stocks, I'm not really surprised. Go look at the history books, my friends, as well. This is what catches a lot of people off guard. And one of the reasons why people get caught off of guard so much is this happens constantly. You get great earnings, and then guess what? The market does the opposite. Okay, this is because a lot of the time the market doesn't have a whole lot to do with the actual prices itself. And that was one of my questions. Someone was asking me, well, how much, do the fundamentals and all the information on there have to do with the actual market? Because, people say, I don't even know where to begin when reading the news. And I know exactly how you felt. That's why I don't read it. That's correct. I don't read the news. I'm not worried about that. No, I want to know something like earnings. I have to know those quarterly earnings can bring a stunning amount of volatility into the market and offer us some really fantastic trading opportunities as well. But we have to be very objective with all of this. We have to make sure that when we're doing this, we're trusting the price first and foremost. I only can imagine today how many people are sitting there and they're getting hurt because they bought Apple on the open when they saw that massive gap up. They bought Facebook today as the market opened higher, and now they're enjoying a $5 loss or so on this. Not a great thing, because people have this massive thing of fear of missing out. And a lot of the time the news can do that to you, my friends. You're so focused on not missing out on the opportunity that you can't actually see the risk that's associated with that opportunity. Now, a lot of longer term market players, would turn around and say, well, the great thing about just buying and holding is you weather out that storm. So, for example, if we go back over to the charts for just a second on here and we see, this market opened up today. Let's just zoom in so you can see it. Let's just mark off of here. This market opened up today at 331.81 and right now down at 323. So we've seen almost, actually with the lows, nearly a $10 sell-off. Now, my question to you is, how would you feel if you just endured a $10 sell-off? And guess what, guys? We're only, how many hours in? 3 hours into the market. That's a big chunk to take. That's a big hit to take on that. That's like a 3% hit off of that almost that you've seen in that market. And, guys, to see that on your portfolio is very hard when maybe the patience, and this is that fear of missing out, is that massive gap up that we saw today, drawing that line there of where that new high was. Everyone's like, well, I think if I don't buy it now, what's it going to do? It's going to carry on going without me. And often is the case, the market resets itself and then comes lower. And then you're having to take the loss. And then you're wasting time waiting for the market to come back again just to get you to break even. And that to me is not a smart way about going it. Now, obviously, sometimes markets just gap and go. The problem is this, if you buy after everybody else has bought, it becomes increasingly challenging for you to actually make any money out of it. It's a little bit like the real estate market right now. When we think about the real estate market, a good friend of mine here in Pennsylvania, in a nice little area in Chester County, just put a bid in on a house. $50,000 over the asking price, ladies and gents. $50,000 over the asking price. Okay, and it got rejected. And he's like, I'm sitting on my hands right now because I'm just like, I'm not prepared to do this anymore. That is the same thing. Who's in control there? The seller is in control. Do you understand? The seller is in control in this instance. And with the seller in control, it means as a buyer, you are the one taking on the major risk. Now, think about this for a second. The people, if you go and buy this market way up here, let's just make this up. Let's highlight this number again, 331.81. If you go and buy at 331.81, you got to ask yourself, who are you buying from? If you're buying from somebody else who bought this market way lower, when they sell it to you at this particular point, they're the ones making money. You're the ones potentially losing money. They've cashed in. And one of the scary things is you see the decline in price, the market starts to peel off, you think this thing's done, and then guess what? You liquidate down here. What does the market do? Bounce all the way back up. It's a lot easier sometimes to just sit on your hands and wait. I want to see this market carry on. Now, this market may never pull back. That's perfectly fine. If it doesn't pull back, I'm good with that. Thing is, I don't want to be the person buying after everybody else has bought. I don't want to be the somebody's profit. That's the key thing about this, okay? And that's why a lot of people have been emailing me, messaging me lately saying, how do you handle earnings? I typically either prepare myself before earnings, okay, and get into a position before earnings, way ahead of time based on the price, and then I can be in a safety net, or I'm going to just wait for it to play out. Right now, Facebook, I'm going to keep this on my watch list. I want to do one or two things. I want to see, number one, is it going to consolidate and then push higher? Because if it then consolidates a little bit and pushes higher, then I'll be interested in buying it again, because it will have shown me that it wants to do continued strength. Or option number two down here, where I'm going to mark, is I'm going to wait for it to come down and then buy it after it goes on wholesale prices. That's how you buy most things, okay? And that's the way you're looking for it. You go, guys, you've always got to think about this. It's the same principle with Apple. Let's go take a look at the Apple chart here. And I really wanted to focus this on being earnings. And like I said, with the big FANG stocks earning right now, you can just see it on here. Again, think about this for just a second, how you would be feeling on Apple right now if you'd bought today. Now, let's just zoom in on the chart so we can see. High prices were around, what, one? Let's just zoom in a little bit for you. You were looking at where this opened today. This opened around 136.32. There's your opening price on the candle right now. 136.47 was your opening price. We put in a high of 37.18, and then bang, it's done. Why pay the high prices? Don't let this get the better of you. I've mentioned this on the show before. Any of my students watching right now will know I talk about this all the time. FOMO, fear of missing out. That's exactly what does it. And if you can be truly objective about prices and look at it, there's a ton of big players selling at this particular price level here. Massive selling pressure coming on at this particular point. That's not somewhere where I want to be buying this market. I want to see if this market can then either do one of two things. Rally from a lower area, okay, rally from a lower area and go higher, or I'm going to let it break through this area here, and then once it's established itself, then look to be a buyer. Either show me strength or show me a bargain. Two things when I'm buying. Write that down, memorize it, you heard it here. If you're looking to buy a market, you need to buy on either serious strength or buy when it's on wholesale and a bargain. That's the only way, because if you buy anything in this world, the only way you're ever going to make money on it is by then selling it to somebody else who believes it's going to go higher. This is the key, and this is why, believe it or not, statistics show this, but the pundits don't tell you this. As a market goes higher and higher and higher and higher, it actually gets harder and harder and harder to make money, because your dollar value is actually decreasing because the asset's getting more expensive. That is why you have to have some real strength on your side when you buy, okay, especially in the long term, to ride out the storm, or you have to get that thing when it's dirt cheap. This down here, a lot of our students at Stockability were buying Apple down here, especially what we were doing is options, and we were buying calls on Apple down at this particular area. Phil Jackson, you'll know this, you were in the room, one of our viewers right now watching the show live, one of my students on here. This is where we were buying calls on Apple. We were doing it right down here in anticipation of that particular move. Pair Dana Joyce, you'll know it, you were there too as well. Welcome to the scene, the show again. You buy low and you sell high. And if you are going to buy high, there ain't nothing wrong with that. But make sure if you buy high, bang, you've got strength. Strength that can carry on taking you higher as well. I do feel strong about this because this is a key concept that we have to really think about as well. Okay, on here. And if anything, I'd be a guy saying, hey, I'd rather buy some puts on this thing right now in anticipation it's going to go lower. Now ain't the best time for it. But I hope that little lesson helps you. Okay, I hope that little lesson helps you, because this is a really important thing. Don't get suckered into earnings. Typically, you're betting on a horse after it's already run a race. Go ask yourself a question. You want to bet on Usain Bolt? Yeah, look, Apple is Usain Bolt. Okay, Apple is a great company, great track record. It's a record breaker and a record setter. But I don't want to bet on Usain Bolt winning a race if he's just run 10 races before it consecutively. You understand? I want to get him when he's fresh. I want to get him when he's rested. That's how I want to do it. That's what I want to do with these markets here, guys. I want to get these markets when they're rested and when they're fresh. So always think about that for just a second. I've been getting so many emails, like I said, about this concept, especially coming into earnings. Always sometimes best. The thing you got to understand if you're going to be an investor or a trader is tomorrow is another day. We're coming towards the end of the week. Typically, the end of the week can be a quiet period. Understand this. Where am I getting it? Am I getting a good deal, or am I getting somebody else, or am I giving somebody a good deal? Think about what I just said there. Am I getting a good deal, or am I giving somebody else a good deal? Buying Apple on the open after earnings like that, you're giving somebody else a good deal. Just something to think about, ladies and gentlemen. And again, Apple is on my watch just a little bit lower. We will come back and revisit this stock in a little bit later on as well. So Whew, a lot of different things. Man, I've thrown a little bit of information at you. Who says I need to have a guest on me? I can just keep going on my own and doing all of this stuff on here. I love doing this, guys. Love working with it on this. This is a great thing. So let's take some questions that have been coming in, and feel free to ask me questions as well. I love it when it's interactive. I love it when people are asking me questions on the show. That is what it's all about. That's what makes Take Stock live. Liana, good shout out to you. Amit, shout out to you. Pedro, shout out to you. Carolina Esposito, shout out to you, and all you guys out there who are watching around the world. Fantastic. And we've been getting questions all around the world as well. So let's just talk about a little bit of this. A few comments on this as well. The first one I want to go for is William in Delaware messaged me a couple of days ago, and he said, Sam, been watching the show. I notice you focus a lot on charts. Okay, what are your thoughts on newsletters? I'm currently a newsletter subscriber, and I wanted to get your thoughts on newsletters. And, there's a good few newsletters out there, and there's some big ones, out there that I've subscribed to over the years, and I subscribe to out of interest, okay? Some of the big newsletters, one of the seducing things about the newsletters is the professionals have good track records and say, hey, if you'd have done what we told you to do X amount of years ago, if you'd have bought Amazon when we recommended you to buy Amazon 10 years ago, you'd be up 3,000% right now. If you'd have bought Netflix when we told you to buy it, you'd be up X amount of percent right now. And that's a great message, That is a fantastic... I got to remember, Hollis, by the way, can you please write them down, because I come up with them and then I forget them. You're going to have to write them down for me. Thank gosh this thing is recorded, okay? Because But, think about this for a second. When it comes to the newsletters, it's great when, a newsletter says, hey, look, we made this prediction X amount of years ago. Look, it's like me turning around and saying, hey, what were you doing in 2009? Because Apple was $11 a share at the time. Apple was $11 a share. And if you'd have bought Apple at $11 a share in 2009, you'd be in bank right now. Well, that's great. But guess what? I wasn't interested in the markets in 2009. So there you go. I mean, that's the thing you need to think about, okay? Where were you at the time? It's great if you've got a newsletter, and it's great if these guys have got these incredible track records, okay? But the reality is, the thing of it is this. If you weren't there at the time to take advantage of that, then it's no use to you, right? Let's go back and take a look at the charts and see exactly what I'm talking about here. Here is Apple again. I'm using Apple as a great subject, but let's go back and let's look at this particular chart here for just a second. I'm moving the wrong thing. I'm crazy. I'm all over the place. I'm moving the wrong thing, but this is a weekly chart of Apple. In fact, let's go over to a monthly chart of Apple, and this will probably be even better to do because I can zoom in and give you a nice view on this. Let's look at this monthly chart of Apple. Now, here it is back in 2009. And what I want to do is I want to go and put a price line on here. So let's go and put a price line on Apple. So we're going to go and put a price line on Apple right down here. Now, obviously, this has been adjusted, okay, because they've had their stock splits ever since. But this is the equivalent of $2.79. At the time when it was trading, this thing was about $11 a share in 2009. Well, Apple's a great buy back then. Great. Look at it now. Maybe you weren't old enough to be an investor back then. Maybe you were still in high school. You had to get through college. You've had to get a job. Or maybe you just weren't even interested in the market at that time. It's all well and good saying that look at where it was. Because look, I can always turn around and go, look at where it was. The question is, where is it now? And the question I've got is, are you getting the same bargain right now? Hell no, because think about your dollars. This is a cash equivalent of right now in 2009. You could have bought it for, let's just mark this off here for you guys, $2.79. Let's round it up, my friends, just to make this a little bit easier. Let's call it $3 a share. You could have bought Apple, and today Apple is trading right here. And where's it trading? At $132 a share. Man, you would have made some serious dollar, assuming you were there and you felt comfortable buying it. And the problem you have with a lot of newsletters, and again, please let me make this clear to everybody watching the show right now, whether you're live, recorded, or whatever you're doing, sitting on a sunny beach or in your home doing it. I'm not here to ruffle feathers. I'm here to just give a logical, unbiased, objective opinion of things. And I think there are some fantastic newsletters and resources out there, and a ton of work goes into them. But again, my question always is, what can I do with the information now? I'm not going to buy into a subscription newsletter who tells me, hey, you could have bought Apple on our recommendation back in 2009 at $3 a share, and today you'd be making X amount of dollars. Well, guys, you could have recommended I bought Bitcoin about 10 years ago, and I'd be a multimillionaire off of that alone, right? It doesn't matter what you told us to do then. What matters is, what are you telling me to do today? And that's what I always look at, because the question on any investor's
lip should be right now, hey, great, I didn't buy Apple at $3 a share. And by the way, not every company's out there is an Apple. There's a lot of companies out there that are absolute dogs, right? You buy them, you hold them, and they do nothing. Literally, and I'm talking established companies that have been around for a long time that have literally done nothing. Okay? So here's the thing right now. If I'm an investor and I'm new to it, say, hey, I graduated college 5 years ago, okay? But I'm really behind on my 401k. I'm really behind on my pension plan in the UK. I'm really behind on my TSP. Wherever it is, what do I do with my dollars right now? The problem is right now, you're going to pay 132 for a great company like Amazon, like Apple. You're going to pay big money for a big, strong company. The question is, how far are your dollars going? Is that going to make good sense to you right now? To me, it makes no sense to you. Because at the end of the day, you've missed that opportunity. So buying a newsletter that's telling you about what they did in the past is great. My question is, what recommendations are they giving you now? And can you afford those recommendations? Because big brokers and analysts are always giving you upgrades and downgrades constantly. But the question is, what is the price of that stock right now? And can I afford to actually buy any? That is why we look at things like options to participate in these markets. That is why we need to learn skills of being able to profit on a market when it goes up and down. Maybe right now you can say, look, I haven't got $100,000 in the bank and I can't buy enough Disney stock or Amazon stock or Apple stock. So what do I do now? Well, you need a different game plan. Now, here's the great thing. If Apple ever comes down to $40 a share, $10 a share, $3 a share, I'm buying as much as I possibly can, but it ain't there right now. And I got to maximize my dollars. That's what I have to do, is I have to maximize my dollars. So again, the problem with a lot of these newsletters is a lot of them go off of past performance. Well, guess what? You can go back and you can look at a Usain Bolt. He ain't going to be running that race as well in 10 years as he does today. Everybody has their heyday. What matters is now in the market. And I like to come to the market with a fresh set of eyes every single day and look at what the opportunities are today. And that's my piece of advice for you on the newsletters. Again, I'm not discrediting them. There's some great information and they might help you find some diamonds in the rough. There's a needle in a haystack. But sometimes, guys, you just got to ask yourself the question, does it make sense for me to be able to buy it right now? Okay, and that's the question always asked. Can I afford to buy it? That's one of the reasons why, William, I have a little bit of a thing with newsletters. They're great, but very, very long term. I hope that helps as well. Amanda from Illinois saying, why, when the market is going up, do I see a very slow rate of return on my money? But when the market goes down, I tend to lose so much. Well, part of that can be fees. Part of that can be adjustments. It could be because you're in a mutual fund. It could be because of the structures of the assets that you've got. It could be if you've got an asset allocation portfolio, the way that thing's been allocated. And there's many, many things. But one of the key things to all of this that a lot of people don't understand, and I just mentioned this on the show as well, is one of the issues you're going to have, Amanda, is that when the market is going higher, and we just talked about that, your rate of return typically decreases. Because again, going back to the Apple example, if I had $1,000 and Apple's trading at $3 a share, I can buy quite a few shares. But if Apple's trading at $132 a share right now and I've got $1,000, I ain't buying very many. I can't even afford 10. Do you understand? So the problem is you need more of the asset. It's like saying, hey, I own one house or a condo that I bought for $200,000 in, let's say downtown Denver, right? Seeing a massive explosion in real estate down there. I bought a condo in there for $100,000 or $200,000 10 years ago. Now it's worth 800 or $1 million, right? That's great. Okay. Well, if you had a 800 to $1 million to buy that condo now, you're probably going to be able to buy one. But if you had that 800 or $1 million back then, you could have bought a lot more. Basically, the cheaper something is, the more of the asset you can buy. And the more of the asset you buy, the greater rate of return you see. So the issue you have right now is as the market goes higher, the price is higher, your dollars aren't stretching as far. Your pounds aren't stretching as far. Your euros aren't stretching as far. This doesn't matter where you live in the world, guys. Wherever you live in the world, this is the same problem you've got. Your dollars just aren't going quite as far because the price of the asset is going up, which also means that the rate of return decreases because they appreciate at a slower rate. You know, this is a deep concept on here, but I can show you it and I can go onto some charts and I can give you an exact example of this by going over to the charts right now and actually showing it with a real example. Okay, so you know, the problem is again, if we go over to some long-term charts, so what I'm going to do is I'm going to go onto a maximum chart. I'm going to show you markets. This is an example I use an awful lot. So let's go back over to the charts again, to my picture. What do we got up on the chart right now? Let's just look over here and see what we've got. We've got the S&P 500, the SPX we're looking at, okay? And this will explain that point beautifully to you, like a long-term chart. So no one's going to argue. Look at this chart. I mean, it is literally parabolic, this market, okay? All right, parabolic. Okay, Now, the point is to this is if you take a look at how high this gone, no one's arguing that the markets go up. Markets go up. In the long run, they go up. But the problem is the rate of return decreases the higher and higher it goes. So to give you a little bit of an example of how and why, I'm going to take you back to around 1980, just after I was born, okay? And I want to look at this, and I'm going to measure the period between, let's go from 1980, and here's a really significant point, to, let's say, the last crash, major crash that we had in 2008, right? So you can see a beautiful period of time here. So I'm going to go ahead, I'm going to take my fancy little price level tool. Or in fact, what I'm going to do is I'm going to mark it, and I'm going to actually do this tool here. So let's go over to this, and let's mark off my price level tool. So what one shall I use on here? Actually, I can use the price level tool. That's fine. So I'm going to mark it from here. In fact, what I need to do, even better than that, is rather than a price level tool, let's use this one to show you. So I'm going on my drawing tools, and let's take a look at what. I don't want a regression line. What one would I want to have? Trend line. There you go. So let's go from 1980. Okay. And what I'm going to do, if I can just plot 1980s, I'm going to drag this over. And I'm going to show you to how the market performed. If you'd have even sat through this major drop here, all the way to the highs that we had. Okay. Let's just go keep it round. Let's keep to the highs in 2000. All right. Now, you can look from 1980 to 2000. Let's zoom in on the chart right here so you can see this. From 1980 to 2000, that was 7,305 days. That was 20 years. And over that 20 years, or 241 months, market went up 1,420%. You seeing that? 1,420%. Let me underline that for you a little bit better so you can see it, and I'll zoom in a little bit more. You can see it. 1,421. If you're looking at where that was from, my friends, that was from way down here all the way to here. You see that? Okay, 1,421%. That's a pretty impressive gain, right? But let's take a look at where the stock price was going way back to here. Look, you were looking at this thing was about a little over $100, more like $150. And even then we topped out around 1,500 on the points, right? Now, that's great if you're in that baby boomer period. But let's say fast forward on here, somebody came into the market, let's say about 12 or 13 years ago. So right after the financial crisis, or even around 2007, 2008 even, okay? They came into the market, or let's say, hey, you know, after the massive sell-off we had here, they waited until the market took out these highs. So let's just see how that would have played out. So if we go over to here right now, let's just remove this. And let's look at a little bit more data on the charts for just a second. And let's zoom in and let's take a look at this. Let's say, all right, once those previous highs were taken out, and hopefully you can see this, everybody. All right, here were those previous highs. Now, obviously, we've got a considerably higher than we were in 2007. Remember, we're going from here to here right now. And maybe we waited and said, hey, you know what? I want to wait for the market to break higher. So after breaking higher, we decided to get into it somewhere around here in 2014. So 2014 to today, what have we got? 7 years? Let's see how that same market has actually performed in the last 7 years. So we're going to go to our drawings right now. And we're going to go over to here and we're going to look for our trend line. And what we're going to do is we're going to mark off around here to here. Now, what I want you to do is now look at this, and I'm going to zoom it all in. I'm going to show you this right now. This is over the last, call it 2,952 days, 98 months, and 3,000 days on here. Do you all see what that is? Look at the difference. 165% higher. 165% higher, ladies and gents. That there is the difference. We saw a 1,400% gain from 1980 to 2000. And that's great if you were alive and investing during that particular point. But in the last 7 years, we've only seen, since breaking out of the highs of 2008, the S&P is only 165% higher. That's a key point. Why? Because you're paying such a higher price. Back in 1980, you were paying, and let's just recap on this. Back in 1980, you were paying $150 equivalent per share. Today, you're paying nearly $4,200 per share. $4,200 per share. Your buying power has done what? It has decreased. That is why typically you see that rate of return decreasing. Because if you keep investing, and that's a fine thing to do, keep putting the money away, keep putting money away, keep putting money away into the market. There's nothing wrong with doing that. But remember that every asset you buy, if that asset keeps going higher, the issue you have is that the thing's getting smaller and smaller and smaller. Your buying power is decreasing. It's a really important phenomenon. Not many people understand it. I encourage you to go and look at some price charts and understand it, because it is an absolutely vital part in this whole thing. And something that's so incredibly overlooked. I hope you found that helpful. That was a question that came in. Let's just say, I believe it was from Amanda in Illinois. Thank you, Amanda, as well. And typically the reason why you lose so quickly is because if you're buying up here, if you're buying up at these high areas, if you're buying up around here where I am, and then it sells off, if you've been buying up here, you're immediately losing, because if you keep buying as the market goes up, your average entry price is increasing, which meaning when the market does sell off, you've paid such a high price, you immediately are going into a loss. That is typically why that happens. I hope you found that useful. I hope you found that helpful. It's a long answer to it and a subject that I could spend a lot of time talking about as well. Richard in Salt Lake has just asked me another great question on here. Richard in Salt Lake just said to me, Sam, there are so many different strategies out there. Where do I begin? What a great question. Where do you begin? I'm not a big fan of conventional rules and technicals and everything. There's a study that any of you can look up right now, technical analysis, and it has its merits, and I use a lot of that, but not in the most traditional sense. To me, price and charts will tell you everything you need. Every time you see me on the radio, on the show here, the radio show, whatever you want to call Take Stock Live, all I ever have on here are just plain clean charts and clean price levels. What you need to understand are simple things like trend. If you understand the trend, if you understand what is a relative high, what is a relative low, you're not going to need much else. Now, we have a patent pending system at Stockability that we use called location analysis, and a system called OVER, which helps us do this in a very rules-based way. But in a nutshell, to simplify that down into its rawest thing, is you got to understand, what is the market telling me? Is it making new highs? And you probably want to go with that. Is it making new lows? You probably want to go with that. If in an instance like we have right now on the market, we're not really doing anything. I mean, if you actually look at the S&P right now, and we'll go back to the S&P 500 today and go back over to that on a daily chart. Right now, I'm a bit kind of, well, what's the technical term for it? I'm a bit meh right now because I'm not seeing a whole lot of real movement in the market. In fact, if we go over here, look, we're grinding ever so slightly higher, but every time we're limping higher, right? We're just limping higher on these markets. You see it evidently here on the Dow Jones incredibly when you really zoom in and see it. Look at the consolidation period that we've had here. Remember, right now, the trend is still there, absolutely, and that market is still moving up, without a shadow of doubt. But right now, it's not showing that continued strength. Technical indicators, magic software, patterns and all that are not going to help me in that. What's going to help me see that is looking at the chart and understanding it. I had a question yesterday from Peggy Jerome, who was looking at our one-day event, and she said to me, I hear you often talk about price action. What is price action? It's exactly what I just described. Understanding momentum, strength, weakness, and all those kind of good things on here. If you start putting tons of technical indicators and fancy lines on your chart, the biggest problem you're going to have, you're going to confuse yourself and you're going to get into what we call the Holy Grail syndrome. I use a very powerful tool here called Think or Swim to do this show, and I love the software, so a big shout to you guys at TD Ameritrade for putting together a great package. There's all these different studies on here, bullish patterns, LBR studies, David Elliott studies, source code profiles, moving averages, market strength studies, or volatility studies. I don't use any of them. Why? Because at the end of the day, everything works until it doesn't. I don't need a fancy line on my chart to show me strength or weakness. That is something that you want to do, is focus on the bare bones strength and weakness. You do that, you're not going to go wrong. You want a tip right now? You hear me talk a lot about support zones and resistance zones. That's what we tend to focus on, is good old support zones and resistance zones. Areas where we see major price resistance, areas where we see major price support. And you can just go onto charts. And if you want to know where to start right now, is used to start looking at significant price levels where the market has shown key support and resistance. It's old school, but man, it gives you a good idea of everything. Notice the support here. Notice the resistance here. And if support and resistance areas hold, the market's invariably ranging. And if the market breaks out of support and resistance areas, then it goes into what we call a trending scenario. And we literally focus as much as we can at Stockability on the simple stuff. of understanding this: support, resistance, trend, strength and weakness. That's it. And understanding, are we extended? Are we not? Are we fair value? Are we not? That's really all it comes down to. I would say to anybody, and I've taught a lot of people over the years, but anybody looking at the show right now, you want to know how to get started? Start with the absolute basics. Don't make this complicated. Okay, understanding key support zones, resistance zones. Now we have our own funky way of doing it, but again, getting into that basic understanding is the easiest way. Everything you need is on a bare, clean price chart. The danger is if you start putting too much information on the chart, you're going to confuse yourself and you're going to detract away from what you're actually seeing and what the market is actually telling you. I hope that helps. I'm a simple man. I've been there. I've done it. I've literally tried every single different tool out there, from harmonic patterns to Gartleys to squeezes to Bollinger Bands. And you know what? I just like a plain old chart. That tells me enough. Start simple and you'll make progress. Start complicated, you'll slow yourself down. You don't want to get into that environment where you just don't know what to do because you're so focused. And here's the other thing as well. Be patient, okay? Be very, very patient as well. Dara, remember, good shout out to Dara, one of my old school friends, saying, I need to pay more attention to the markets. Yes, Dara, absolutely, I agree. We all do, but it can be a very overwhelming thing because guess what? There's so much information out there. So again, back to starting with the basics. So the topic of today is, where do I start? You start with the absolute basics and focusing on just something like looking at the S&P 500, looking at the Dow Jones, looking at the FTSE. Don't worry about individual stocks. Get to know how the market works. If you get to know how the overall indexes work, you're going to start to see the patterns in the actual stocks themselves as well. We call them the three kings: the S&P, the Dow, and the NASDAQ. The three kings, as we call them. Start to just focus on those. Get a feel. The best thing you can do is, and again, avoid the mistake of going down to small time frames. What do I mean by small time frames? Here's what I mean. You'll notice here I am on a longer term chart here. It's rolling daily charts, okay? I can go over to here and I can bring this all the way down if I want to 1 minute charts, and you'll see a whole lot of movement on those 1 minute charts, and it feels like everything's moving, and it is moving. You will get ripped apart. You'll get torn a new one if you do something like that. Do not focus on those small charts. When you first start, where do you begin? Focus on the big charts. What are the bigger trends? What am I seeing? And then as you get more confident, you slow it down. It's like my son, he's 3.5. First, he learned to crawl, then he learned to walk, and then he started to try and run immediately. And what did he do? He kept falling over. So we had to get him walking well, slowing it down to build a good, steady foundation. It's really no different whatsoever when you're looking at the price charts as well. So my biggest tip to you is look at the major indexes, S&P, Dow, NASDAQ, and focus on those daily charts first. And then from a strategy perspective, start to see if you can recognize trends and support and resistance, and then you can take it from there as well. If you do need any help with that, I'll show you just how we can help you out, Stockability, with that as well. Or you can try this on your own. Again, like I said to you, I'm a big fan of education. As you know, I'm an educator. But again, you've got to do it the way you feel comfortable doing it. So if you're ready to dip your toe in the water, I'll show you a great way of doing that as well, just before the show ends. Wow, what a lot of cool questions on there as well. I love it when we get questions, and I was worried about could I keep the show going just on my own without a guest, but it seems we did, so everything is good. It wouldn't be Take Stock Live. It wouldn't be Take Stock Live, though, if we didn't actually have Your Call, My Put. And remember, our weekly feature is Your Call, My Put. One of my guest on the show will give me something that they're bullish on or they think is going to go up, that they've got their eye on, and they'll give me something that they think is going to go down. Well, I always give them the choice, but today I'm on my own, so I have to do both. What I got to do, your call is something we're bullish on, we think is going to go up. Your put is something we're bearish on that we think is going to go down. That's pretty simple. That is how it works, ladies and gentlemen. So let's talk about that right now. Well, it's been the star of our show today. It's been the news. Fantastic earnings again. And I'm a huge fan of their products, but it is Apple. On the call side, bullish. I am bullish on Apple. Let's go over to the charts. The major indexes do support this as well. We are still in that uptrend. Let's go back to it. AAPL is your ticker and take a look on here. Now you see we've had a major move in here as well. Now there is some selling pressure and some of the bigger analysts are starting to see some weakness in the market. Very concerned about this, and are we forming a head and shoulders? Well, you'll know it's a head and shoulders once the head and shoulders happens. All right, so who knows? I don't care about what chart pattern may happen. I care about it now. Now, right now, this, where we're seeing it, isn't too surprising at the moment, seeing this kind of selling pressure, but I like to use multiple charts. So I'm going to go up to a weekly time frame, and you'll see if I zoom in on this weekly chart, we are in a major area of price resistance, which has been a long-term target for us. So Apple has definitely got its work cut out for us. So to get this now and to push on new highs, we have to clear through all of this mess right here. So the thinking of this is, if this is going to go up, and I think it's got a chance to go up, it's got to do it pretty soon if it's going to do it. So I'm going to be a little bit more aggressive on the buy, because I'd expect a very short pullback and then bang, strength through it. Because if we don't hold a short pullback, guys, we are going to be retesting the lows, and then you're going to be looking at around 120 on here. So to get that perspective, we're going to have to go back up, down to the, back down to the daily chart where we can see this right now. And what I really like is, because of our current location, we are a little bit high. We are a little bit high on there, but I have to say the biggest thing, and I'm going to give you two aggressive areas and a conservative. The first aggressive area for me is the aggressive area. I really like this around this 130 area where we had this last lift off. Really nice. But then the more conservative area, I like it around the 125 area. So this $5 range, let's just zoom in for you, between 130 and 125 would be my pullback area. Here's attempt number 1. Here's attempt number 2. I have to remain it. That means any of you short sellers, could you take an advantage of that to the downside? Sure. Right now, though, this thing could rally off these and just go anyway. All right, it might not get to either of these areas, but my key area, if I have to really pick one, taking all this back off it, I really like this 130 area. That for me, for a pullback and a continue higher, is the ideal area. That's where I'll be looking for some call options, I think, around that 130 area. And then the natural target's got to be typically first right around here at 140, and then I'd be looking for new highs around the 145, 150. Can I smell it? Yep, I can smell 150 if this thing can keep pushing. I don't see any reason why it can't. Again, it's still in a major upward trend. It's going to have its work cut out for it right now, but if the market keeps pushing, I don't see any reason why Apple won't continue. Don't be surprised if we see a period of consolidation as the market licks its wounds a little bit and gears up for this big move. Don't expect it to happen overnight, but 130 for me is the line in the sand. If that 130, 125 area doesn't hold, guys, I hate to say it, we're going back to 120, and then I'll be a buyer again anyway. I got to say, long-term portfolio-wise, Apple I really like while this market is holding up strong. That is going to be my call, but sniffing around the 130 mark for an aggressive buy on Apple as we speak right now. That means, what about your put? What could I be looking at on your put right now? Well, I'm going to mix things up a little bit right now, and I'm actually going to look at some currency for just a second. You might say, this is currency? I don't even know what currency is. Well, if you're not sure about what the Forex market is or the currency market is, in 2 weeks' time, we will be doing a Forex special here on Take Stock Live. We're going to be doing a Forex special in a couple of weeks with a very special mystery guest coming up on the show, talking all about the major benefits of the currency market. But if you're an active Forex trader looking for a little bit more on here, man, I feel really unpatriotic doing this, but I gotta say, GBP USD, that thing is under some serious selling pressure right now at the moment. Let's just look at it on a long-term perspective for just a second on the weekly charts. And I got to say on here, it's really kind of peaking out. If you look at this kind of chop on this range that we've been seeing on this market going all the way back to 2016, it's been up, it's been down, it's been up, it's been down. It's the proverbial yo-yo. And it all started around 2016 when we had, you guessed it, Brexit, which finally happened, and they left the Union as well. This is a major area, 1.4, a huge area. I'm looking for a double top formation on this right now, and then expecting some more downward pressure on the pound dollar. I'd love to see it go higher, but until this area breaks, I'm sorry, I'm leaning on it. That is just the way it has to be. This is a huge area on GBP USD. Now, that means obviously I believe that the pound is going down, which invariably means the dollar is likely to rally against the pound. Looking at it on a daily chart, I think this gives us a really nice picture right now. And a lot of my Forex traders will be licking their lips looking at this. I think you've got a real nice opportunity where this market is just tipping around right now. 139.44. I'd be looking to obviously kind of lean on this at this 1.4, 139 area. And I'd be then looking for some prices down to around this 138 area, and then a retest of these lows at 137. Do I think there's much more than about 300 pips in it? I really don't. I'd say 150 is a halfway point. But for a short-term play, I do like that on there. Is there anything you could do as a stock trader? You could be looking at the ETF of the British pound, and you could maybe buy some puts on it, okay? There's always ways, as long as the open interest is there as well. But I do know we have a lot of Forex traders who like to look at this show as well, so that is the thing that I'm bearish on right now. And if you've never ever traded Forex right now, don't just run out there and start selling the pound. Heck, this show is for education and entertainment purposes only. I am not a registered broker. Okay, I am not a financial advisor and I probably never will be. I'm here to give my opinion. So you have to do what you have to do at your own discretion. You understand that? And if you've never traded Forex before, it's a leveraged asset class. So you have to be careful with whatever you do. All right. Right now on this, if you are familiar with the Forex market, that's my outlook. You do what you need to do. Put your stops in. I've been wrong many a time, but I know when I'm wrong, I lose a little bit. And if I'm right, I tend to do pretty well. So that's how it all works on there. Bound right now is my bearish play that I'm seeing for your put here on the regular feature here at Take Stock Live. Wow, it's 12:55 Eastern already. I can't believe that I've been going for nearly an hour all on my own. It's been fun. I do miss having a guest. I gotta say, I feel kind of lonely. I do feel kind of lonely not having a guest on the show, but it's all been good, and I don't feel too lonely because I got some wonderful viewers on the show here. Gonna give a little bit of a shout out to everybody who's been in the show right now. Pedro, Hollis, Phil Jackson on here, Caroline, Amit, Dana Joyce on here as well. Chukwama, nice to see you on here. Brian Dennis, hey, thank you for your ongoing support. My goal is to get hundreds of viewers on this show, spread the word about how great the markets can be, and simplify something that really can be incredibly perplexing for many, but can be an absolute pleasure to be involved in if you start to have a serious plan about it and you treat it relaxed and you enjoy it and you embrace it. That's what it's all about. I'm throwing the horns back to you, Pedro. I love that emoji, one of my favorites. I am a rocker. What do I have to say? You're speaking the same language as me, my friend. I mentioned it earlier. We do have some great ways for you to get involved. If you're still scratching your head thinking, I want more information about this, let me take you over to the Stockability website, give you a little bit of an idea about what you could do right now if you do want to take your trading and investing education that little bit further. All right, on here, go over to stockability.com. Here's the website. You can zoom in and see it nice and easy right at the top here. And the best thing you can do is this. There's one or two things you can do. Yesterday, we had a fantastic one-day event. It was our preliminary one-day event. Scroll all the way down to the bottom where you'll see me looking a lot more dressed up right there. Scroll on down here and you will see we had an event yesterday which was a special one-day event enhancing your trading and investing performance. It was live yesterday. We had a couple of hundred people registered and attending it, which was great. It was a 6-hour event. Guys, it's on YouTube right now if you want to go and check it out. All you have to do is this. If you want to go and look at it on YouTube, you can go and look at it and you take us an idea about it. It was a great day. I want to thank all of the guests that we had on there, all of the coaches, and more importantly, all of the people who actually attended it. It was a really awesome day. Where can you find it if you've not yet been on there as well? Let's just go over to YouTube and I will show you. So if we go YouTube and we go to here, Stockability. I'm trying to type as best as I can on here. All right. Here we go, YouTubeability, Stockability. I actually want to go back. That's our shared drive. So let's just go to here. So YouTube, click on that. All right. And we go home on here. And if we just go on here and we go Stockability, you'll see this. There you go. Stockability comes up and there it all is. Okay. And then you will see. So if you just do a search for Stockability on YouTube right now, you can go and subscribe to our channel and you will see a ton of different videos, radio commentary on here as well. People chatting about all different cool things on here, all the previous Take Stock lives, all the videos that we do on here, a wonderful amount of different stuff. But right at the top here where you see these 5 faces here, you'll zoom in and you'll see them. Ryan, Brian, Giovanni, Graham and myself, all the coaches of Stockability on here. Go check it out. It's 6 hours and 34 minutes. I don't expect to look at it all in one go. Man, it's longer than Zack Snyder's Justice League cut. But it's there. Take a look at it. You want to get a feel for what they do at Stockability, that's the place to go and check it out. It's easy for you to view. And if you are interested in getting a special offer to take part in our education beyond that as well, go back over to the Stockability webpage over here right now and click on the register button. And if you register, you're going to get an exclusive little offer to go a little bit further as well. So it was great. Joseph, you were there for the whole time. Respect to you. I was there for the whole time, although I did have to take a little bit of a break as well. Hope you didn't get in trouble looking at it, but thank you for your support. We really do appreciate it as well. If you are completely and utterly new to the market and just want to get a little bit more of a feel of understanding what we do, this is a brand new thing that we do. If you go to the top page where it says education and click 3 levels down to where it says trading and investing orientation, go and click on that. And we have this awesome self-paced introduction to really understanding everything about the market, from futures to stocks to forex to options to income to wealth to charts to strategies. all of that good stuff. I'm in there, Ryan's in there, Brian's in there, all the coaches. It's $99. It's self-paced, probably about 15 hours of self-paced on-demand content, which is interactive, working with our student consultants as well. It's a pretty cool thing. Go check it all out on there. That's a great place for you to begin to get an honest, unashamed, objective, unbiased version of what the market's all about and the best way to tackle it as well. It's called the Trading Investing Orientation. Once again, go to education on the Stockability page and you can check out more right there as well. Man, we covered an awful lot of stuff on today's show. I hope that was useful for you. Guys, we will be back the same time next week here on Take Stock Live. Remember, this is a live show. So again, thank you guys for your comments, Hollis, and all you guys as well. And thank you, Hollis. I will send that to you absolutely. And you can go and just share this link right now on Facebook if you want to with everybody. And I'll go through that and do that. But thank you so much, Hollis. I'll definitely do that and get that in an email to you as well. And all of you guys, if you're looking for a little bit of entertainment and your friends are looking to do a little bit more in the market, tell them to come check us out. Every noon or every Thursday, we're here on Facebook Live noon. Okay, I'm usually with a guest. Sometimes I'm on my own. Today I've been on my own. Go check out the previous shows. They're all here on Facebook Live if you want to look at the recordings, because we always like to do it live. But also you can go to the Facebook, not only the Facebook page, but the YouTube Stockability channel and see it there, and plus extra bonus material and content as you take a deeper dive into the world of Stockability. Take Stock Live is brought to you by Stockability. Thank you, everybody. Have a great rest of your week. It's just gone 1 p.m. here, Pacific time in Philadelphia, in Pennsylvania time, East Coast time. My name's Sam Evans. I'll see you all next week. Have a great rest of your week and thanks for listening. Cheers. Take care. Bye-bye.